Welcome back. We are now in segment 5.5, and in this segment we'll be discussing other manufacturing expenses. So far under the expenses side of the P&L account, we have discussed raw material, stores and spare, power and fuel, direct labor, repairs and maintenance, right? So these are the expenses we have discussed so far. So now we are going to discuss other manufacturing expenses. So as the name suggests, any of the direct expenses which were not classified under the earlier heads we have discussed, that is raw material, stores and spares, power and fuel, direct labor, repairs and maintenance. So any item that has not been classified under this previous heads will be classifying under the other manufacturing expenses. I'm not saying any expense that is not in the previously discussed heads. I'm not saying any expense, only any direct expense. So we'll make a distinction between what is a direct expense and then an indirect expense. So you can actually easily distinguish between a direct expense, is also known as a manufacturing expense, or a general expense. When a product is manufactured, right? When a product is manufactured, so there will be raw material, and then you'll be pushing it into the production process, right? And finally, a finished good will be emerging, right? So this product is what you're going to sell, right? Till the product is ready, till the product is manufactured, say all expenses to this side of the production process, that is till the product is ready, will be a direct expense, right? And all expenses incurred after the good is produced, after the good is manufactured, will be a indirect expense. So please note that direct expenses are all expenses that are incurred up to the point of manufacture of the product. So till the product is manufactured, what are all the expenses that has gone into producing this product will be a direct expense. So what are the expenses that are required for manufacturing this item? So you need raw material, so this is obviously a direct expense. So you cannot produce the good without for example, this is a finished good. So without raw material you cannot produce this good. So obviously raw material is a direct expense. Power is a direct expense because you are using certain machinery to produce this good, and those machinery run on power. So without power those machines won't run, and without those machinery your goods cannot be manufactured. So power is a direct expense. Labor, see here, so in your organization there will be many employees. Some are in the direct factory, so some are in the factory directly employed in the production process. There are other employees who are not in the shop floor, who are not in the actually production process, but they are in the support activities like office staff, computer operators, HR staff. So all these they're not into directly producing the good, but they provide ancillary or support services. So factory, the labor that is engaged, the salaries which you pay to the labor who are engaged in the factory, the direct production will be a direct expense. Whereas salaries paid to the office and other staff, the non-production staff, right, will be a indirect expense. So please make this distinction very clear. So labor is a good example to grasp the concept of a direct expense and an indirect expense. So direct expenses are expenses which are incurred up to the point the good is manufactured. So all these expenses to the left hand side, right, prior to the good is manufactured, till the goods are manufactured, will be a direct expense. So the labor that has gone into actually producing the good, actually manufacturing the good, right, the production and the shop floor, the supervisors, the managers on the shop floor, right, who are directly engaged in the production of the process, in the production process, will be a direct expense. And all the staff who are the salaries of these staff we are paying for support services that come after the good is produced. So say for example computer operators and HR staff, sales staff, your commission agents, right, and all these selling related aspects will be coming after the once the good is manufactured. So that will be an indirect expense, right? So repairs and maintenance is obviously a direct expense because we undertake repairs and maintenance to the machinery, and machinery is a direct expense. So repairs and maintenance is also a direct expense. So in the CMA, we already discussed the CMA is a very condensed form. We discussed the CMA is a condensed format. CMA is giving us space to enter very few items. Once we complete the sales, under the expenses, CMA is providing us very little space. It is telling us to enter only raw material, power, labor, repairs and maintenance, right? Depreciation is one item that has a special row. Then opening stock of finished goods, opening stock, work in progress. Anyway, those will be there. Then you have sales general expenses. Interest is one expense we have, since it's a major component from banking point of view. Then you have some entries for non-operating income, non-operating expenses, and provision for tax. So only these are the expense items which the CMA data provides. So no matter how many items you find the P&L, say for example, a P&L has got, for company has got 100 items. Somehow you have to fit those 100 items only under these heads, right? You have to somehow fit these items. You have to take each item and see under which of these heads it will go. You cannot have a separate head for each of these 100 items. So CMA data is actually achieving this condensation. It's taking these 100 items and translating into a standard format which can be compared across many companies. So this is a succinct format, a short format, and any expense should be classified under only these heads, right? So till now we have entered raw material, power, labor, repairs. We have already entered, but we have directly taken these figures from the P&L. So there was no condensation, there was no reduction. So if you remember the example of Maruti Suzuki, the consumption of raw material was there in the P&L. We directly took that amount and placed it in the CMA under the head of raw material consumption. So power and fuel, there was an item under for Maruti Suzuki. We took that amount directly and placed the same data. Same is the case with labor, repairs and maintenance. There was no real reduction that is happening, but now the reduction will happening. But now you'll see the reduction happening. Any expense, any direct expense, we already discussed what a direct expense is. So any direct expense which is not coming under raw material, power, labor, and repairs, please put it under other manufacturing expenses. And these items will find many, right? So out of these 100 items, if you take raw material, power, labor, repairs, right, the other 96 items will be pertaining to either other manufacturing or general expenses, right? So majority of the items you come in the PL will be ultimately placed either in the other manufacturing head of the CMA data or in the selling and general expenses. So any expense that doesn't find a place in these rows, raw material, power, labor, repairs, depreciation, interest, tax, right? If an expense item doesn't find a place in these broad categories, we'll finally place it on the either other manufacturing expense or selling and general expenses. So the distinction between other manufacturing expense and selling and general expense is the distinction between direct cost and indirect cost. So any expense, any direct expense which is not appearing under raw material, power, labor, repairs, depreciation will be placed under other manufacturing expense. So any other item which is still which has still not entered into other manufacturing expense, the leftover items will be placing under selling and general expense. All general administrative expenses which cannot be classified under any head, including other manufacturing expenses, will be placing under selling and general expenses. So in this section we'll be discussing about this other manufacturing expenses. So what are the expenses, the direct expenses that could not be classified under any of these raw material, power, labor and repairs head. So before that, once again, please be clear on what is a direct expense and what is an indirect expense, because going forward this is the classification which we'll be using to either put an item under the other manufacturing expense or under the selling general expenses. So where to place an item depends on the correct classification. So what we are going to say, take for example, you encounter an item called transportation. So where do you classify this item? Say transportation is 100 lakhs. So see, we told that till the product is manufactured, it is a direct expense. All expenses incurred up to the manufacture of the product will be a direct expense, and all expenses incurred after the good is manufactured is a indirect expense. So transportation can be either at this stage or this stage, right? So transportation could be the cost incurred in bringing the raw material to the factory. That is a transportation expense. In that case, it's a direct expense. Transportation cost could also be incurred in transferring the finished goods to the distributors, to the warehouses. In that case, it will be a selling expense, a general expense, right? So please note that a single item can be either a direct expense or an indirect expense. So you should know the actual purpose for which this expense was incurred. In the absence of any additional information, transportation cost usually will be placing on the direct expense, right? But in case you have the breakup, the purpose for which it was used, then you can place it in the correct head. Take for example an item called rent. So is it a factory rent? maybe the company has taken this factory on rent and is paying rent. Is it a factory rent or rent for the office? So if it's office rent, it will be a general expense. If it's a factory rent, it will be a direct expense. So this classification is something which you have to apply common sense, and you're going to get better at as you go on doing a lot of examples. So what I will now do is we'll take many examples. We'll take a number of items that can appear under the head of other manufacturing expenses. So we'll take all likely entries that you can ever come across. So please remember earlier, and while discussing the sales and non-operating income, we considered some 39 items and said any item under the income head you will find under this 39 items. So rarely you will come across an item that is not under this head. So we covered all possible scenarios where the income can appear, other sales or non-operating income. So similarly here also under other manufacturing expenses, we are going to take all possible items that you can ever come across the direct expenses. So annual maintenance costs, AMC. Usually what happens is companies when they purchase machines, there's a provision called AMC. So AMC is the supplier, the machinery supplier will be if you pay a certain amount every year, right? So the company will be taking up the maintenance free of cost. So if there is any breakdown, right, and the replacement of any parts, so those sort of stuff the companies will be taking care of. So AMC cost is, since it's related to machines and the direct, right, it's a direct expense. So if you come across an item called AMC in the P&L of any company, please place it in the other manufacturing expense in the CMA data, right? Please note that whenever you find an item called AMC in the P&L account of a company, you are given the P&L account of a company, and you have to analyze it. Before analyzing the P&L account and balance sheet, you have to have a standard format called the CMA format. We are now in the process of preparing this format, CMA format. Once we complete the CMA format in this chapter 5 and chapter 6, then we'll go on to do the analysis. The analysis will come later, but we should have the CMA data ready. So we're now in the process of preparation of the CMA data. For the CMA data, whenever you find an item called AMC in the P&L account, please dump it under the head of other manufacturing expenses in the CMA data, right? And carriage inward. Carriage inward is a transportation cost that is incurred in bringing the raw material from the source to the factory. This we already discussed. It's a direct expense because unless the raw material comes, you cannot manufacture the product. So this is a direct expense. So it is incurred before the good is manufactured. Up to the point good is manufactured, we said is the direct expense. So carriage inward is a direct expense. Freight charges. Freight charges is another term which is used in place of carriage inward. It is the same. It's the transportation cost. So whenever you come across the term freight charges, you can place it under the other manufacturing expense. Consultancy charge. Again, consultancy charge, we don't know. So the company has employed some consultant. So this consultant is offering his expert advice. So where do you place that? So is the consultant a sales consultant? Is he providing his advice in respect of branding and advertising, how to improve sales, or is he offering his technical skills in respect of the machinery, the plant layout, those sort of stuff? So we don't know. So in the absence of information, you can. It's always better to, if you ever come across this clash, whether when a CM item can be classified both as a direct expense and indirect expense, it's always better to place it under the direct expense. So what we are doing is we are hiking the direct costs. So when you're not clear, please increase the direct cost. So what ultimately happens, as we'll know later, by increasing the direct cost, the EBITDA will be lower. So we are arriving at a very conservative figure of EBITDA. So this figure might actually be more. Should we have made a mistake? Actually, this is for example, this is a selling and general expense, but we classified under the direct expense for lack of information. So due to this process, your EBITDA will be lower. But then the advantage is we are actually making a conservative estimate of EBITDA. We are not unnecessarily hiking the profit, right? Please note that whether you place on the direct expense or selling expense, finally the net profit will be same, because all expenses are taken care of. So this expense, whether it goes in direct or selling, will be finally the net profit will be same, but EBITDA will be tracking the performance. This is the gross profit. Only expenses up to the direct expenses stage will be considered. So selling expenses will not affect EBITDA. So anyway, we'll come to this profit discussion later. The point I'm trying to make is whenever there's a clash, whenever a single item like consultancy or transportation charge or any charge can be classified both as a direct expense and a general expense, please classify in the direct expense. So Consultancy charge can be either a consultant for sales promotion or a technical consultant like plant layout. But since we are not given any information, we can classify it under a direct expense. Okay. So fees for technical services. Again, this is similar to consultancy charges. So usually when we see the term called technical, you can place it under direct expense. Job charges, processing charges. So what happens is companies sometimes outsource, right, the processing activities to outside parties who will complete the job and return the product to them. This is done for a service fee. So these charges anyway is obviously a manufacturing expense because this is a processing charge. It is in the production process. So this is a direct expense. Conversion charge, again, as the name implies, this is a cost incurred in converting the raw material to the finished product. So whatever expense is a direct expense, right? Cost of internal consumption. Sometimes companies consume the finished product itself. Usually you sell a finished product. So companies sometimes consume a part of this finished goods for their own use. So for example, if 100 units are produced, maybe they can use 5% for their own internal consumption, then rest 95% they can sell. When this can happen, take for example a hydel power plant. A hydel power plant which generates power, right? But some of the generated power it can use for its auxiliary consumption. So what is known as auxiliary consumption means for its own internal consumption. The power plant itself has to run and it needs power. So out of the generated power, it can use something for its internal consumption. So this is a cost of internal consumption sometimes. So where we place it is a direct expense, right? So this is used for generation, right? This is used for production. So this is also direct expense. Next, demurrage. The machinery is or a material is imported and it's come to the port, right? Right, the material has arrived at the port and is waiting to be handed over by the company. Sometimes if the company could not take delivery for various reasons, like it could not arrange payment in time or various other reasons, the port will be imposing some penalty, right? Because in a port there will be a lot of ships waiting for landing on the berth, right? And since the space in the port is limited, the ship should come, unload the material and then go off, right? They can't stay forever. The ship should come, unload the material and go off because other ships are waiting. So if ships take longer time and then the delivery of this material cannot be taken, the port imposes what is known as penalty, known as demurrage. So demurrage, again, it is a direct expense because it is expense incurred before the production has started, isn't it? This you can say it is a delay payment. It's a payment towards delay in procuring the material. The material has not yet arrived to your factory. There is a delay. There's a delay at the port, and this delay, because unless that material comes, you can't start your production. So this is a direct expense. When you come across a term called design and product development charges, so please note that even before the production started, the companies usually go for product design. This is usually in the case of engineering companies. Take for example a automobile company. So to design this automobile, right? To design this bike or car, some design process goes into it. So this is an expense incurred even before the production started. So this is a direct expense. Dies and molds used in the production process, so obviously it's a direct expense. Engineering expenses, again, is used in the course of manufacturing, so it is a direct expense. Erections charges, installation charges. Actually, sometimes this is made part of the fixed assets itself, right? What we call as capitalization. We will see this when we actually come to that stage, right? We'll discuss the concept of capitalization later. But if it is not capitalized, if these expenses are not capitalized, this will be, since this expense related to machine, it is a direct expense. So what usually they do is they capitalize it. We will see what capitalization is. I don't want to confuse you right now, but in case it is not capitalized, if you find an item called erection expense in P&L account, usually you will not find it because it is transferred to the balance sheet and added to the fixed assets and depreciated thereon. Right, but in case you find it, it's a direct expense because it's related to machinery. Fuel oil, these items are usually placed on the power and fuel. So power anyway is a direct expense. The single entry for power and fuel. So sometimes besides electricity, companies also need to use fuel like diesel, right? For their various production purposes. So that is a direct expense. Handling charges, loading charges, again, this is a expense that can be both a direct expense or indirect expense. So what is this handling? Is the handling of raw material or is it handling of the finished goods? So we don't know. So in the absence of information, we'll place it under direct expense. But if the P&L account specifically mentions handling charges of finished goods, then it will be a selling and general expense. So insurance, again, insurance is something which we cannot say whether it's a direct expense or an indirect expense. So insurance of plant and machinery, insurance of factory assets like factory building and all. So those will be a direct expense. However, it is if for the insurance of you have the finished goods that are already manufactured, and you have insured those goods because they might be damaged to fire or any other threat. So that is a insurance for that will be a indirect expense. So in the absence of information, please classify it as a direct expense. Rent, lease rent, or if it is a factory premises, it will be a direct expense. If it's a showroom rent, it will be obviously a indirect expense. If you are not given any information, just rent, placed on the direct expense. License fee, production royalty, right? All these are what happens is, even to start the production, sometimes company obtains license from other company to manufacture goods, because the main company will be holding license. So this company has obtained license to manufacture this good. So to start the production itself, it has to pay the license fee. So this is a direct expense. Loose tools, you can classify it under tools and spares, stores and spares that you can do. So machinery hire charges. So sometimes instead of purchasing machinery, because machinery might cost a huge amount, so sometimes company take the machinery on hire and then start working on it and producing the goods. They'll pay some rental charge to the machinery owner. So this is obviously a direct expense, isn't it? Because unless you have the machinery, you cannot manufacture the goods. The goods are manufactured using this machinery, so it's a direct expense. Project expenses, sometimes if you see the term project expenses, directly you can place it under the direct expenses because it's a expense directly related to the project, right? Rates and taxes. See, government imposes various taxes, right, for factories for undertaking production. So this is actually direct cost, because unless these statutory obligations are met, you cannot start the production. So this will be a direct expense. Please note that sales tax is something is a general expense, selling in general expense, because sales tax comes after the goods are manufactured. But rates and taxes, these taxes are even before the production has started. Is a direct expense. Security service. Well, if the security is for safeguarding the raw material and the factory premises, it will be a direct expense. If the security is for the security of finished goods, it will be a indirect expense. So as you can see, there are many items. So usually you will find these items will be sufficient to take care of your P&L accounts which you encounter in your day-to-day job. But in case if a new items come, obviously you can use your plain common sense to classify whether it's a manufacturing and general expense, because the concept is very clear. Whether the expense was incurred before the production, before the product was manufactured, or once the product was manufactured. So the expenses incurred up to the point till the product is manufactured will be a direct expense, and expenses incurred after the product was manufactured will be a indirect expense. So you can make the distinction. So let us go to that example which you're following, Maruti Suzuki, and see what are the various direct expenses, the other manufacturing expenses we have to put in the CMA data. As I already told, Maruti Suzuki had a single page P&L account to provide a compact presentation of the P&L. So it has got sales and various expenses. These are all the expenses it has listed. So to fit it into one single page, this is a compact presentation they have covered. So all expenses are not coming here. So they have provided schedules. So if you want further breakup, we have to go to this schedule. So let us see what are the other manufacturing expenses. So cost of material consumed, we have already entered this under the raw material. So that is gone. We will come to this item later, right? This item will come later. Purchase of stock in trade. Towards the end of this chapter, we'll be discussing it. Inventory, work in progress, opening, closing, we didn't come to that yet, so we'll discuss in a later segment. Employee benefit expenses is something which we already classified. This we have placed it under the 843.8 cost. If you remember, we placed it under the direct labor, so that is gone. Finance costs, we have not yet come. We'll come to that. When we discuss interest, we'll come to this. Depreciation, we have not discussed. That will be the next chapter. So there's something called other expenses. So we have to go to these other expenses and see whether any of these expenses can be placed under the head of other manufacturing expenses in the CMA data. So let us go to schedule 31. I think we've seen this schedule 31 earlier, right? When we are dealing with this power and fuel and repairs and maintenance. So again, let us see if any of these items we can classify under the head of other manufacturing expenses, right? So here consumption of stores, we have placed it already under the head of stores and spares. So no need to take it again. Power and fuel already we have. Power and fuel we have already placed it in the CMA data under the head of power and fuel. Repairs and maintenance, all these three we have already taken. the single head of 90.4 crores. So let us look at the other items. Rent. See, rent information is not given, so we'll place it under direct expense. Actually, there is a note number 50 which I'm not reproducing here, but if you go to that, you will get a sense that this is a direct expense. So we'll place this 15.6 crores. This 156 is in millions. 15.6 crores. So this we are going to place it as a direct expense. So let us see what are the various other items that can come under the direct expenses. Insurance, no further information, so directly put it on the other manufacturing expense. Rates, taxes and fees, we have already discussed. This is a direct expense. Royalty, this also we have discussed, license fees and royalties. Because Maruti Suzuki, the foreign company, is actually Suzuki, right? So maybe they are incurring a lot of royalty and license fees. So this is a direct expense. Tools, machinery charges charged off. So tools and machinery space charged off. This you can actually place it on the stores and spares, right? Because this is a machinery space, you can place it on the stores and spares. Net loss on a foreign currency. If you remember, this is actually a non-operating expense, which we discussed, which are yet to discuss, but we'll come to it later. Right? This is not related to the core activity. This is not raw material. This is anyway not considered with the company's core operations. This is neither a selling expense nor a production expense. This is something related to a foreign currency transaction. So this will be a non-operating expense. Advertisement, sales promotion, warranty, all these are, right? All these are, as the name implies, they are selling expenses because they come after the goods manufactured. Even the transportation distribution expenses, actually, if you're just given transportation expenses, we'll place it under direct expense. But here we're given transportation and distribution expenses. So let us assume that it is a, since the word distribution is coming, so let us assume it is a selling expense. So any other direct expenses which we can think of, right? No other, because loss on sale of fixed assets is a non-operating expense. Provision for doubtful debts is a general expense, right? So other miscellaneous we can anyway place it under the head of selling general. So these are the items which we can place under the direct other manufacturing expenses. So what are the items we are going to classify under other manufacturing expenses? We are going to classify rent, right? We are going to classify insurance, rates and taxes, royalty, right? That's it, right? Usually we would have classified transportation also, but since it's transportation and distribution, let us leave it, right? And let us also take tools and machinery parts charged off, right? Because stores and spares, because please note that we are going to use the stores and spares in a subsequent calculation. We come to the concept of holding levels. So when we come to the concept of holding levels, we'll speak of raw material holding level, stores and spares holding level, work in progress and other items. So when you look at the stores and spares, the formula will pick up, right? Stores and spares the formula will pick up it will calculate like this. It will calculate what is the closing stock of the stores and spares, right? Divided by the monthly consumption. So the monthly consumption will be what is the closing figure of the balance sheet, stores and spares. This will be appearing in the current assets, right? And then we will be dividing by the P&L amount. What is the consumption of the stores for the entire year divided by 12. So per month, what is the consumption? And then we are at the holding level. So this P&L item will be picked. So this stores and spares will be picked from the CMA data. So this stores and spares will be picked from the figure appearing under stores and spares head of the CMA data. So if you add this figure, this will be actually presenting a wrong picture. So let us have only the consumption of stores here in the CMA data, and this 1546, right? 154.8 crores. Let us place it under the other direct expense, so that the formula for consumption of stores will not be, the holding levels for stores will be accurate. Whether you place it under stores and spares or other direct expenses, it is a direct expense. That's not a problem. But to get a correct formula for the stores and spares holding level, let us place this 158.4 crores, right? Let us place this 154.8 crores under the direct expense instead of stores and spares. So now these are the items which are going to have under other manufacturing expenses. So rent, insurance, royalties, rates and royalties, taxes and fees, royalty, rates, taxes and fees, royalty, tools, machinery, space, charged off. So this 2065.2 crores, right? 2065.2 crores. We're going to place this item under the CMA data under the head of other manufacturing expenses, right? So let us go ahead and do that. So 2065.2. Please note that we already had an entry of 90.4 crores. right? We already had an entry of 90.4 crores. This is pertaining to the machinery, that repairs and maintenance, right? So in this format, we didn't have a separate row for repairs and maintenance. But actually, if you go to the internal formats used by banks, you'll have a separate row. So there we can put 90.4 repairs and maintenance, and this 2065.2 we can have on the separate row of other manufacturing expenses. Here I am clubbing both these items because we don't have a separate row. So 2155.6 is the total of other manufacturing expenses. So right, we have come to the end of this chapter. In this chapter, we have discussed the concept of other manufacturing expenses. So please remember, whenever you are presented with a P&L account, the major items, the expenses items will be raw material, stores and spares, power and fuel, labor, and repairs and maintenance. Of course, depreciation. So these will be the direct expenses. So any item that doesn't fit into these categories, we have some other items called interest, provision for taxation, right? And opening stock, closing stock, those items. So any expense item that doesn't figure in this list, either it will be a other manufacturing expense or selling and general expense. So if it is a direct expense, that is, if it is expense incurred till the point of production, you are going to classify it under the other manufacturing expense. And the rest of all items will be placing under the selling and general expense. So we'll close this segment here. In the next segment, we will be discussing a very important item called depreciation. So that is also an expense item appearing in the debit side of P&L account. We're going to discuss depreciation in the next segment. See you there.